Hello, and welcome back to another review of a trade that we took on CPI yesterday, February the 12th. This is the outlook of the trade, and we made a nice profit. I will show you today how I entered, how I took my profit targets, and I will show you that on this trade I made 7.5%. That is $1,600 based off an 21k AMP global account. So yeah, let's go over it. First, we should have a look on what the day actually did for us. So we already know that we had some equal highs in relation to the daily previous 3 days highs and lows. So we knew that there was a lot of liquidity residing here. There was also a previous day low over here. And what we saw was that during CPI, we dropped all the way down. In the short that I actually created yesterday in regards to my daily bias, I said as long as we remain in a premium opening range gap, I will be looking for shorts. But during CPI, we moved all the way down through my draw liquidity, this yellow box, and we actually turned from a discounted opening range gap, from a premium opening range gap towards a discounted opening range gap, and we remained like that for the entirety of the New York pre-market, meaning 7 to 9:30. So at 9:30, let's have a look on what it looks on bar replay. And it will be very interesting today because today we only had a drawdown of one tick, literally one tick, and there are some nuances to the trade today which you should really study, because if you do not study this, you will miss a lot of trades potentially like this in the future. So at 9:30, we see that we have a discounted opening range gap of 241 and a quarter handles. So what does this mean? This means that we have a very large gap and that we are able to trade it. If you already follow me for a little while, then you know that once a gap is large enough, instead of trading the actual quarters of the opening range gap, I halve the gap and I use the quarters of the lower half of the opening range gap, meaning that instead of 25, 50, 75, and 100%, I will actually trade 12.5, 25, 38.5, and 50%. And let me see, 62.5 for my 125% target. So, all right, let's have a look on when first presentation is formed. So, as you can see right now, first presentation is formed at the 9:33 candle over here. We didn't get a entry signal yet, which is totally fine. But the gap itself is, let's calculate how big. It is 19.25 handles. And you may ask, well, why is your gap drawn from this wick to that body? Well, if you zoom in, and this is the nuance that I was talking about, we have a small volume imbalance over here. So the bodies of these two candles do not overlap. And ICT teaches us that whenever we have a fair value gap like this, and we go up, once the wick does not touch consequent encroachment, and there is a volume imbalance, you have to use the volume imbalance for the entire fair value gap to get the true fair value gap, and you will see why. So let's mark the original fair value gap without the volume imbalance. That is this part. And let's go to the next candle. So right now you see that our limit order has been placed. We'll go to the next one. We get tagged in on our limit order, And the low of this candle is 21,572.5. You can see it over here. So 21,072.5. Our entry was at 21,572.75. So we got tagged in with literally a tick, because I enter one tick above a fair value gap. And if we look at the body open of this candle, so that will be this number over here, this is 21,572.5. So the upper limit of this fair value gap literally got touched to the tick. So if you didn't enter with the plus one tick strategy that ICT teaches us in the 2024 mentorship, and if you didn't incorporate this fair value gap, so those two things are crucial to this entry, because otherwise it would never retraced to the origin of the fair value gap, but it did retrace to the upper limit of the true range of the fair value gap. Plus we used plus one tick for our entry to make sure that we cover the potential spread of futures, and then we were in. So basically with this trade we only had one tick drawdown so far. It hit it, and from that moment on it just kept continuing on. So because our entry was here and 12.5% was here, this doesn't cover the minimum amount of handles that I want in a trade. So our first profit target would be at the 25%. So we have 4 contracts here at 25%, and afterwards we go to break even. So let's just scroll through the bars. Next candle. First profit target is hit within 3 minutes, and it is, let me check, 36 handles. Very nice. We close above our first profit target. So if we close above our first profit target, only then I go to break even. If we just wick it, my stop will remain at its original position, which is the candle low of the 3 candles that make the fair value gap. So let's continue on. Second profit target is hit. Third profit target is hit. Now we wait for a minute. I will explain these boxes very soon. Our fourth profit target is hit over here. And right now at this moment we only have one contract running because we went long with 9 contracts, sold 4, 6, 7, 8. So a whole trade has already been completed. And right now every extra that our runner contract can make will be wonderful. And I personally would like to see this minor buy-side liquidity be taken, so the CPI highs, and ideally it would also take out these daily highs, but due to the fact if you look at the daily and the weekly chart, we have been consolidating, so taking out those highs is potentially very hard to ask in this current market environment, but let's see what it does. So something is very interesting to see here. So at the, what candle is this? At least at this candle, I think it was, now I am unsure what time this was. Why can't I see the time? Oh well. Anyway, we see that a fair value gap was created here, and that during this time it turned into an inversion fair value gap. It respected it perfectly towards consequent encroachment. You see it, the high of that candle over here is 21,682.75, and the consequent encroachment is 21,683. So we respected consequent encroachments by one tick, and then we dropped off, taking out these sell side lows. And then we continue lower. We don't hit our stop loss yet. It is respecting the upper quadrant of this new day opening gap of the 5th of February. Then we have a market structure shift, and now things become interesting. So we had this inversion fair value gap. This was first an inversion fair value gap being respected. Then we had the first fair value gap in the new price lag where we went to the downside, meaning that this can be used as a potential future inversion fair value gap as a stepping stone. And that this fair value gap, when we get above it, can be actually turned into a reclaimed fair value gap. So once we get above here, first of all, what you see is that once we close above that inversion fair value gap, we wick in it, we stay in that upper quadrant, literally in the upper quadrant. As you can see, we didn't even hit 25%, and we move away to take out minor buy side over here. This is minor buy side. All right. Oh, hello. I moved my. There we go. All right. Also, another thing that's very interesting to notice here is that once we went above here and took out this minor buy side, and with knowing that there still is minor buy side over here and major buy side with the previous daily highs over there, these two candles, up close candles, have become a breaker block. So what do we see right here? We see an area where three PD arrays, so an inversion fair value gap, a breaker block, and a reclaimed fair value gap, are overlapping, meaning that this right now serves as a very high resistance liquidity and balanced price range to get through. So in theory, what I could have done is move my break-even stop loss, for example, to the low of this candle, so the lowest PD array of the three PD arrays, and it should have been safe there. So let's see what it does eventually. We go towards the draw on liquidity of the clustering new NDOX and NWOX. We wick inside the yesterday's previous first presentation. We get back into that breaker again. We go a little bit higher towards the new day opening gap of 6th of February. And from this moment on, we just start to consolidate basically. But look at this. So during this whole pullback, we remained in these three overlapping PD arrays. And if you, like I said, if you moved your stop towards here, it still would have been safe. And we still respected with the bodies these PD arrays. Yes, it was a little bit of consolidating over here with the reclaimed value gap and the breaker, but we still respected it. We didn't break through it, we didn't see large candles, and eventually we just start moving to the upside. So let's continue. And at this moment in time, I was actually just chilling, didn't do much. There we go. Over here, this is 16:30. Normally, I close all my orders at 16:30, but I was like, minor buy side is very close, and the previous daily highs are also very close. So what I did when I went to sleep, I put my take profit over here at minor buy side, and I just went to bed. And once we go back towards the real chart, so, and let's hide the 2024 mentorship indicator, remove all these drawings, enable executions, you will see what I've done. So we have our entry over here, one tick above that fair value gap to get entered, since it literally touched that true fair value gaps range to the tick of on the high. We sold 4 here, 2 here, 1 there, and 1 there. So these are those quadrants of the lower half of the opening range gap, like I showed before. And then we have this minor buy side over here. And as you can see, I took my final runner contract take profit exactly, well, 1 tick above minor buy side. And that completed the trade for me. This trade gave me 7.5% profit on my portfolio of 21k. Over here is the AMP Global Clearing broker statement. As you can see, we made 1,600 bucks. These are just currency changing rates because I have actually put euros in this, so it gets well calculated to USD. So don't look at this. This is actually the first trade that I took on this account in I think 2 weeks. So it took. I was being very patient before I took this trade. So what you should have learned today is that you should study the first presentation and volume imbalances. Make sure to only include the volume imbalance if it doesn't reach the 50%, the consequent encroachment, if you would drag it through. Yeah, and that was it for today. So I hope you learned something. And if you have a question, leave your question in the comments, like the video and subscribe, I would say, and then I'll talk to you next time. Bye bye.